everyone. Got a carrier update here with me and Anthony Smith. We're going to talk a little bit about the DHL Supply Chain Pricing Power Index that came out on Friday. It stayed at 70 this week, but we're going to take a look here at both reefer and van outbound tender volumes. We've got the van outbound tender volumes here in blue and the reefer in green. So apologize, this was updated as of last Friday, so we don't have some of the weekend data in here, but basically, what we were going to talk about is how prior to the holiday weekend, we saw volumes moving in a typical pre-holiday movement. Volumes were surging. We saw tender lead times extending. Some of the normal things we see prior to a holiday were happening on the volume side of things, but they weren't happening on the capacity side. We weren't seeing really a surge in tender rejections that we typically see prior to a holiday, which was a bit surprising to me, but that is what we see. We have seen some strong volume on both the van and reefer, but most of the growth, I think it was about 3 or 4% growth week over week prior to the holiday weekend. Most of that was driven by van volumes.
So, Andrew, one of the things that we're looking at when we're looking at these charts, and not so much of the increase that we were expecting with rejection indices or tender rejections, do you think it's something to do with carriers being a little bit more efficient?
It could be. I mean, this is something that we've noticed over the past few weeks. We take a look at the next chart. We got the outbound tender reject index. It's tumbled over the past few weeks, right? We've seen routing guides get fortified and solidified. We've seen contract rates being rebid up, and that convergence between spot and contract rates. All of that has put downward pressure on rejection rates. But we're still at 25%, right? 25% of all dry van tenders being electronically tendered are being rejected on a national basis. That is a lot, but it's much better than 29% like it was just a few weeks ago. Same thing on the reefer side. 40%, 41% is not ideal, but it's better than 50% where it was a couple weeks ago. This is progress, and as bad and as tough as things have been for the last few weeks, I think we should be celebrating any type of progress that we're making here.
That's right. So definitely a thing to note is that the tumbling down is still relatively very high when we're looking at overall tender rejection indices, but maybe perhaps we are getting a little bit more efficient, and you said 50% for, of course, down to these lower numbers. Signs of progress, more efficiency entering the market for sure. Any expectations for as we get a little bit closer to the next big holiday, 4th of July?
Well, I assume that volumes are going to stay strong, right? We've got really strong consumer demand, even though we starting to see some of that shift back to services. We're seeing strong airline spending. We're down only about 10-15% over 2019 now. We're seeing services spending in restaurants up single digits over 2019. And we're starting to finally see that furniture spending, the home improvement spend coming back down to earth, but it's still up 35% over 2019. So still really strong there. I don't see any demand on the consumer side waning anytime soon, and we still have very low inventory levels. Even when that reversion happens, we should have plenty of freight to be flowing. And the truth is that we just don't have any signs into a significant amount of capacity being added over the next few months. We may have some drivers getting back on the road as they get vaccinated and they feel safe to come back. We may have some carriers looking to add capacity. They've been ordering a lot of trucks, ordering a lot of equipment over the past year, but drivers are still hard to find. And that's visible in the wage increases that we see across the board. It's visible in the hiring on the load boards we see everywhere. It's just difficult to seat the trucks no matter how many you're buying right now.
So one of the other things you just mentioned, a lot more purchases happening. We're seeing more furniture being bought throughout the country, a lot more spending on services as well. But sticking on that furniture side, can't help but talk about some of the backlogs that are still kind of happening right now. We're seeing, of course, we had Memorial Day that just happened. A lot of places are having Memorial Day specials and things like that. Mm-hmm. That only kind of brings to me is more and more volumes, more and more orders, and more backlogs. Is this something that you're seeing?
Yeah, certainly. I mean, anecdotally, you look at Dooner. He just bought a couch for his new house the other day. He said it won't be here till late fall. And then it was funny, he posted that on Twitter, and like 10 of his followers said, hey, the same thing. They've bought couches in the last few months, not going to be here for several months. This is the reality of the situation right now. We have this bullwhip effect where demand and supply both fell to zero for a short time there in March, but demand snapped back much quicker and has just thrown the entire market out of balance. And that's been particularly true in furniture and in bedding and in home improvement.
Exactly. And one of the other areas, appliances, a lot of builders pulling those appliances forward as more and more home construction happenings. I couldn't go without this entire segment without talking about housing, but
we almost made it.
We almost made it. But thank you so much for joining us for this carrier update brought to you by PowerFleet.